And there is blood in the streets. What's going on, guys? It's Ricky. Let's go ahead and talk about this. So we had Meta and Microsoft report earnings today, but honestly, they were kind of like the least reactive, right? Obviously, they're the most valuable companies. We got Microsoft that originally gapped up. It was up about 2 to 3% after it reported earnings. It exceeded earnings per share. It exceeded overall revenue expectation. But it looks like when the guidance call started, things really began to go south. And there tends to be a common trend. Is it the AI spending? Because it's not just Microsoft that reacted this way. It was also Meta. Meta also hitting expectation for EPS and earnings per share. EPS and revenue, but yet its guidance was off. Why? Again, I wanted to show you this very quickly. So if you're asking the question, no, this is rigged, they hit it, why is it selling off if they hit expectation? I've said it before, guidance. Meta misses on user growth, which again is a big miss, warns of 2025 jump in AI spending. Remember, that's been a really big focus for a lot of these tech companies. They're pouring billions of dollars every single quarter to try to own a piece of that marketplace. And pretty much what Mark Zuckerberg just said is like, hey, if you thought our spending for 2024 was a lot, get ready for higher spending in 2025, at least based off of what they previously were expecting. And again, it looks like investors didn't necessarily really like that. Are we seeing too much money being poured into AI? You guys can let me know down in the comment section. Obviously, I feel like we're really just scratching the surface when it comes down to it, but it's just crazy to see how bullish these companies have become because of how heavy they're pouring into these markets. But now we're almost seeing the opposite effect where they're pouring too much and now investors are kind of standoffish, right? At least that's the reaction that we got today. But will this continue into tomorrow, right? Into tomorrow when the market opens and Apple and Amazon are set to report earnings after the market closes as well tomorrow, Thursday, at the belt. So Meta down 3.1%. Microsoft, down 3.73%. But the ones I really want to share with you, I'm like choking over here, is Robinhood. Robinhood is down 12.44% after market hours. It's not just Robinhood. It's actually also Coinbase. Coinbase is down 4.84% after market hours. And then there was MicroStrategy. I know we talked about this during today's LPP live trading session. And at one point, MicroStrategy was down to lows of 215 to 16. It was down like 10% after market hours after already losing 4.2%. So just so many of these companies actually exceeded expectation, but again, their guidance was just a little bit lower. Now, that wasn't necessarily the case for Robinhood. Robinhood, when it comes down to actually what they shared, right? Because I wanted to look a little bit more into it. Okay, like it missed revenue estimates. Is that really a big thing? It exceeded earnings per share expectation. So, that's good. But their user growth, their big focus is user growth. It wasn't necessarily what they were expecting. And their overall focus for the up and coming years, you have to think about a really big focus for them right now is Bitcoin. As long as that crypto and Bitcoin activity is up, then the apps should be active. But at least the last quarter was a pretty kind of like stagnant quarter for crypto, right? In comparison to Q4. Q4 is off to a great start for crypto. If I'm not mistaken, crypto is like at nearly all-time highs. So maybe we can see that change into Q4 of 2024 that will be reported in Q1 of 2025. But we'll see. As of right now, the markets did not like it, an overreaction on the way down, which again doesn't really surprise me because Hood has been incredibly bullish. It's had an amazing 2024. And this little pullback, again, if you're a long-term investor, it's really just another opportunity to buy in at a lower price. But also I think this is also a great reminder that you should never be in too heavy at, overbought levels, especially right before a company is about to report earnings, unless you want to really roll the dice and be in Carvana. Carvana is up 20%, exceeding analyst expectation and also an amazing expectation and guidance for for all of 2025. So make sure you guys look into Carvana. Carvana has been really showing signs of an amazing recovery. It came from lows of $3.55 to overall highs of $213. Now, again, this could also be another stock that, hey, is it growing too quick within a very short period of time and becoming too overvalued? Possibly, right? But Carvana is on a run. It's one of the best performing stocks that I've seen for 2024. If we see at the start of 2024 and where it's at right now, almost 450% is what it's gained. And that's not including what we've experienced already after market hours. Actually, I want to include that very quickly. So from the start of the year, which is right around here, to where we're at right now, which is $248 a share. 248 would be right around this general area. So we are up 492% on Carvana. I have FOMO, to say the least. So amazing work. Again, I'm very excited to follow up and to see what actually gets reported tomorrow, to see if the bloodbath will continue with Apple and Amazon, or if they end up saving the market. Because again, markets are pretty much at all-time highs. So this could really send the markets over the edge, right? With all-time highs, is this really going to be kind of like the turning point where markets begin to correct themselves? So we'll make sure that we keep you guys posted. All I literally ask you to do is to drop a thumbs up and subscribe. And again, if you want to tune on in to watch me trade live tomorrow, it's the second link in the description down below. I appreciate your time like always. Let's make sure that we end the year on a green note. Take care, team.